Hey guys, how are you doing? Ken's MoneyMatters here. As usual, I hate to be the bearer of bad news, but sometimes you need someone like me who comes here and tells you, okay, you need to go slow, you need to take it easy. So I'm here to talk about Mansa X. Of course, many people have asked me to talk about Mansa X in the past. I've spoken about it, I think like 2 or 3 times. I've done a review. I think last year I did a review. I'm not sure if I've done one this year, but yeah, check my channel. You will find videos on Mansa X and a deep dive on some of the fundamentals of Mansa X, of this particular fund and how it operates. So that's not the essence of this video, but a big but. If you're getting into these investments, you have to be careful all the time, right? And that's something I keep saying in all my videos, that don't just rush into something without clarity, without analysis, without being sure of, what's your exit plan, what's your backup. So essentially, Mansa X has been going wild in Kenya. Everyone talks about Mansa X nowadays. Like, I look at YouTube videos, I hear people talk on podcasts, and everyone is about Mansa X. Obviously, that's going to happen because of the returns. It has amazing returns, which personally I'm interested in. No one is not interested in good returns, right? No one doesn't want amazing returns on their investment. If you make an investment, you're looking for returns. That's the whole essence of investing. But essentially, if you look at Mansa X, and I'm also going to talk about other special funds. Let me know in the comment section which ones you want me to talk about. But I know there's OAK Special Fund. I know there's another one as well, apart from Mansa X and OAK, but I'll try and talk about as many as possible that are right now domiciled in Kenya. In this video, I'm just going to do a quick review of Mansa X. I've done this before, but like, this is 2025 review. Once you do that review, I'll tell you why I think you should be careful of this particular investment. So let's jump into my laptop. We're going to go through it and just look at the details. And then after that, we're going to conclude by saying, should you be very careful or should you be avoiding Mansa X right now? Because, Kenyans, we always just rush into things, especially when it becomes a big thing. And that's how we always get burnt all the time. We never learn. This time, I'm here to teach you. If you're willing to listen, let's dive in. So I've done this review. So most of you know about Mansa X. I don't want to go into the basic stuff, but this investment of this fund is by Standard Investment Bank, SIB. We're looking at assets there right now. Assets under management is 45.9 billion. This is 2025, guys. 45.9 billion. Kenyans are investing. Kenyans have gone all out investing. Obviously, there are institutional investors here as well, I'm sure, but a lot of retail investors here trying to get the returns. These people give crazy returns. So you'd expect that people would be rushing in, but there are so many risks with that, right? There are so many risks. Anyways, 45.9 billion assets under management as of 2025. So again, here they are said, our client base includes governments, fund managers, corporations, financial institutions, high net worth individuals, and retail investors. So you can fall under the high net worth individuals or retail investors, but a lot of this money I know comes from a lot of financial institutions. Kenya has a lot of financial institutions, but a lot of people who are also trying to build wealth are putting in their 100,000. Sorry, you can't put that, but 250,000. Half a million here and there. So that's a lot of money, thinking about it in that sense. So even though we call them retail investors, and you might imagine that they don't invest as much, they do invest a lot of money. So that's the client base we're looking at there, which gives you a good base anyway, because it means there's money flowing in, but that money has to be properly managed, right? This basically just gives their journey over time, how they've done so far. And then if you come here, they give you the products and the services, the equities, fixed income, corporate finance, all those products that they do offer. And this is just a highlight of everything as it is. I want to make sure that we're going into what really matters. So down here, what is Mansa Special Fund? It's a multi-asset strategy fund with a long-short trading model that invests in financial instruments, both local and global, with the primary objective of creating capital growth for its investors. The fund exists in both Kenya shillings and USD. And the fund profile is here. So minimum investment here is 250,000 Kenya shillings. And 2,500 for USD. The top-up minimum should be 100,000 if you're going to top up at any point, and that's an equivalent of 1,000 USD at least with their conversion. You have an initial lock-in period of 6 months. So if you invest today, you're going to have to lock it in for 6 months period. I've done this before. The custodian is I&M Bank. Withdrawals takes 2 to 3 working days. I haven't invested with them, so let me know in the comment section if that withdrawal is actually accurate. I've spoken to so many clients who have invested with them, and I don't remember if they spoke about investment withdrawal, but yeah, that's very important. You need to know how long it takes for your money to hit your account, because sometimes you want your money. Performance fee, 10% above the hurdle rate. So basically, if they go above what they have promised, then obviously they give you that, they charge that performance fee. The hurdle rate is 25% per annum, which is quite high. Okay, the hurdle rate for Kenya shillings, sorry, is 25% per annum, and the hurdle rate for USD is 15% per annum. Fund assets under management as at 31st of DEC was 39 billion. Obviously, you've seen that they have gone way above that now. So those are some of the details if you want to start investing with Mansa X. Some of the asset classes that they invest in, very important. You need to know exactly what are you investing in. We're looking at local markets and global markets. They have fixed income, assets. They have stock indices. They have commodities. They have single stocks, which is just basically individual stocks. Precious metals. They have currencies. They have derivatives. They have NSE equities as well, cash and equivalents, ETFs. Now, let's go to the returns. Full year net returns. This is 19.53%, basically 20%. That's a net return after all the taxes and the management fees have been deducted. The gross return was 24.5%. Now, there are very few investments right now that could give you this kind of return, but obviously they give you amazing returns. If you look at their performance over time, even if you go back here to quarter returns, you see 5.6 quarter one, 4.9 quarter two, 5.1 quarter three, 3.78 for quarter four. Then Mansa X Special Fund, the 24-month performance, it gives you the 2023 performance all the way to end of 2024 with an average quarterly performance of 4.43%. Not bad. So within 72 months, you should be able to have more than doubled your money. So with 1 million invested in 2019, by end of DEC, you're looking at 2.8 million, 31st of December. Now, that's a really good growth after fees. 2.8 million from 1 million invested just under 5 years. Yeah, just around 5 years ago. 2.8 million, very good return. That's steady, that's good. If you come down here to the special fund, the USD performance. Now, USD performance obviously is going to be really good at 12%, because you want to get a USD performance of 12%, a full year net return. 17% gross return on USD. That's just crazy. It's crazy, man. I really think that there's a good investment from the overview of it and the performance perspective of it. I think it's a really good investment. Obviously, one that not so many people can replicate in terms of investing. If you put 10,000 USD again in 2022, I think that was their inception. That's been 27 months. You're looking at a return of 13,000, meaning like 3,000 and as net return, 3,011. That's the performance. In USD, that kind of performance is really good, really good. USD, if you can get even just 6%, is amazing. So if we're talking about 17% gross return on USD, is crazy. I don't know. I need to understand this strategy that they employ, to be honest. I want to understand it. Anyways, top 10 holdings of quarter 4 2024, you can see fixed income instruments. They have like 12%. That's like more safe stuff, you'd say. Interest rate derivative, 6%. S&P 500, 4%. Natural gas was 3%. Canadian dollar, 2%. Microsoft, 2%. Palantir, which is a really good company, 2%. Netflix, 2%. Lilly Company, 2%. Cash and cash equivalents, 2%. These are the top 10 holdings, so it doesn't give you the 100% holding. So obviously they have like a loads of individual stocks, I would imagine, but their biggest holdings are these ones. And so obviously they're quite safe because they invest in fixed income with 12%, but still 12% leaves you with 80 something to play around with, which would then take you into the risky territory. S&P 500 is pretty solid, so with 4%, that's fine. I would probably put that as a higher rate if I were the manager. Canadian dollar, I don't know why they're betting so much on the Canadian dollar, to be honest. This is interesting. I would want to understand the rationale behind that. Microsoft Corporation, that's fine. You'd understand why. Palantir has been growing rapidly and aggressively, so it makes sense. Netflix, same. Eli Lilly and Company, same. I have that. This is a good one. So they're saying Mansa X return versus government bonds. Mansa X has done the best, followed by the government bonds, obviously. If you're investing, then money market funds and fixed deposits, then SACCOs are the least. Those of you who only know about SACCOs, by the way, SACCOs are not like the best investments. They're good for loans, but not the best. Anyways, if you come and look at the performance of Mansa X, you see it at 18% and the rest is at like 16. For me, I still think it's a good investment to have. Now, let's go to the bad part. Okay, so Mansa X looks really good. This is what I want you to think about as an investor. Everyone is rushing into Mansa X right now. And what happens usually when people rush into a particular investment? Now, if you go back in history and look at some of the problems we've had with funds, some of the companies or the firms or the investment companies that have actually collapsed, there was one risk, the risk of people rushing in, too much money to manage, too many assets to manage. Now, it's not bad to have too many assets because you want to have the returns. When they have too many assets, they get to charge fees and they could make more money and become even bigger. It's just like a normal expansion of a business. But what happens with finances is that sometimes your structures and systems are not prepared for the amount of people, the number of people that comes into it. That's one. Two, sometimes there's laxity in the management of that particular company. Sometimes there's laxity in the management of the company. And when that happens, things can turn around really, really fast. And sometimes when these companies grow so fast, the collapse can just be as big and as fast and as rapid. It can be shockingly fast. So you have to be careful when you're putting your money into a fund that is growing so fast, giving amazingly high returns, and everyone is rushing into it. You have to be careful. We have learned over and over again through the principles of investing that you want to be fearful when others are greedy, and you want to be greedy when others are fearful. This is a typical case of people being greedy right now, and I know everyone is rushing in, and obviously it's a good investment. But what I'm saying here is, as someone who's investing, number one, make sure you diversify. Make sure you know exactly that this is something that can also go down. It's not cast in stone. Bigger companies have gone down. We don't know so much about, their strategy. They say that, they tell us where they put their money and the percentages. Yes, but in terms of how they go short on different things, how they go long on different things, how they rebalance them all the time, we don't know the details of how that happens. And one mistake, one wrong move can bring this thing crumbling down. So this particular return is based on a very specific strategy. If one wrong move gets them off that strategy or a new trial of a different strategy, then it's going to be a crazy thing. That's going to be crazy, right? So you want to go in knowing that there's a bit of risk in this. Take a precaution while getting into this investment. It's a good investment. It's going to give you returns, but please diversify. Know that, okay, I'll put some money in here, but then there are many other investments you can put your money into. And even different special funds as well. You can go into a different special fund, which has a different strategy, different asset allocation as well, to make sure that you are well diversified. So what I'm saying is, as an investor, you want to make sure that you're not rushing in the way everyone is rushing in. Don't put too much money. Don't take all your savings and put into Mansa X because it's giving you 20%. It could come down and get you to zero. So with any investment, for me, it doesn't matter how good the returns are. I always have to analyze. I don't know much about the management system. I would want to do some research on it, by the way. I need to know how stable that is. I want to know more about the strategy and get more information about that as well, just to see how this is always rebalanced and in what conditions, what market conditions actually push them to rebalance the portfolio, and how often do they do it. And I'm not sure in terms of, I'll need to also do some research on if some money is insured. Do they insure? Do they guarantee any kind of return despite what happens? How much of this money is insured? In the UK, for instance, if I was to invest in such a thing, I would be insured for an amount of money that I must get, by the FCA. So in that sense, I would want to know if there's any amount that's insured in this case, that if things were to go wrong, I would get that money no matter what happens. So these are some of the things you want to ask yourself. So as you go into Mansa X, as people are going and rushing into it, please ask yourself so many questions. And the main thing is, don't go all feet into such an investment. Don't ever rush in blindly. It can be rewarding sometimes because it's like gambling, but it can be devastating if it goes the wrong way. So the moment you get into this investment, please go with caution, diversify. Know that there are other options as well out there that can give you good returns as well. And make sure you've done your analysis and your research well enough, and you are able to take any downside at any point. Until next time, I'm out.